This month we have the topic blockchain, crypto and tokens. So as we probably also know, this week is the Bitcoin Amsterdam event, one of the biggest Bitcoin events in Amsterdam that takes place at the Westpark on Thursday and today. But today we are here together for the Holland Fintech Meetup with great speakers in the lineup. So welcome everybody, I'm Schaap. I'm the Strategic Development Manager at Holland Fintech. And for the people who have been here more often, you're probably used to Don presenting, our CEO, but he couldn't make it today, so I'm taking it over from him. I hope, yes, it works. The agenda for today, after the opening speech, Allard is going to speak about Techstars. They are hosting us today, so thank you very much for the room and the drinks later on. After that, we have a short market update given by me. Then Willem from the Roos Advocaten will speak about the updates around MiCA. After that, we have a Kahoot quiz. It's an interactive quiz with questions mostly about the market update that I will be giving. So for the winner, there is a prize, so please pay attention. And then there will be a few speakers. Chhay from Heartland Finance, Marco from Hypeal and Andrea, and Robin and Johannes from KUMO and Mieszko from THX Network. And after that we will close with drinks and we can ask questions, of course, to the people that we like to ask questions to. Then Allard, the floor is yours.
Hi, thank you. Hey everyone, welcome. Welcome to our office. So you are at a Techstars ABN AMRO Accelerator program. We're called the Future of Finance, and we are here in the September to December period, and then we move out, and next year we might be on the other side of the street where we were last year or somewhere else. So this is a temporary office. We have 10 companies here, 22 founders that spend 3 months accelerating their businesses with us. I will tell you a little bit about our program, and starting off with Techstars. And the one thing that is maybe good to say up front is that you are exactly in the right place, because we are a full fintech program. So we feel very connected to Holland Fintech. We only have fintech companies from all over Europe, and that's our deepest passion and soul. It's all about fintech. So, without further ado, that's the wrong way. Techstars, we say we are the worldwide network that helps entrepreneurs succeed. So in the world of accelerators, and you all know quite a few of them probably, Techstars has been around for 17 years. And today what we say is we enable everyone on the planet to contribute to and benefit entrepreneurs' success. And you will see we do that at quite a scale. We operate all over the world, not only with accelerator programs like we have now, but we have a venture fund, we have startup community events, and we really feel that we are an ecosystem play all over the world to help entrepreneurs. So I think the most important value of Techstars is founders first. It's all about helping founders succeed. We all know probably that it's not an easy time at the moment in venture funding. After a period of total exuberance, it's hard to get funding right now, and it's companies like Techstars, not only Techstars, but Techstars is one of the largest, that just keep on funding and keep on investing in specifically pre-seed companies. So in Q1 we were the largest seed investor, which means that the pre-seed and seed investors we do, and also the investments in our follow-up companies, were 120 in 1 quarter, and that's kind of the rate at which we invest at the moment. And you can see that Y Combinator is there, and Antler is there. And this is kind of the scale we are operating at. And you can see that we run 54 accelerator programs. For those who don't know, these are 3-month programs, right? Where you have a month of really getting to know mentors, a second month to build, and a third month to basically ready to get back into the world and meet investors. And we've been doing this for quite a while now. As I said, 17 years, more than 380 companies have gone through our classes have been, we've had over the world with 3,800 companies actually graduating. And now we are around $1 billion, 100 billion in market cap cumulative. And maybe also interesting, more than 25 million raised for all the companies that went through our programs. So this is actually happening at a large scale, and it's not only at a scale but also quite some success. So more than 20 companies have become unicorns, and some of them you all know very well, like Chainalysis, ClassPass, maybe you know DigitalOcean, Zipline, Remitly, all companies that over the years went through our programs worldwide. And we, differently than, for example, 𝐻𝐸𝐷, we also work with partners. Now, you've seen our sign, we work with ABN AMRO, but in Berlin they work with Audi, and in Norway they work with Equinor, which is the largest oil company there, and of course we work with Sony, with Pivotal is a venture firm, and JP Morgan actually supports a whole bunch of programs in the US. 38 cities, 14 countries. You can see that every major, but also like major regional city in the US has a Techstars program, and we're covering EMEA very widely now as well. As you can see, not only in Amsterdam, Berlin, Dublin, London, Oslo, Paris, and Torino in Europe, but we're also in Riyadh and in Lagos since last year. We're in Tel Aviv, and in Asia we're in Sydney, and we're opening up another Asia chapter very soon. We also run purely remote programs, which are all online, where everybody can join. But this has become, over the last 17 years, a truly global movement. Now, what we do is different than most other accelerator programs. So we and even most Techstars programs. So we have city programs, which are basically general programs, you can do everything, and we have vertical programs. And we are a very focused fintech program. There used to be a program in London, some of you might know this, the old timers in fintech was the Barclays program, and it ran from 2013 up to 2020, and we basically inherited that. Now the only pure fintech program in Europe is our ABN AMRO program. And this actually works a little bit differently than other programs. So if you look at our mentor base of 80 companies, of 80 mentors that are active in a year, I think that 70 are very, very deep fintech experts, and then there are some more people around. The others a bit more about like general startup or legal, but like such a deep knowledge is, if you go to this program, this is also what makes it different than Berlin or London, where you can also do fintech, is that this is a real fintech deep dive. And founders seem to love it. We ran the first program last year together with ABN AMRO. Partners are hard for startups, as we know. And our founders who responded, 100% response rate, gave ABN AMRO a 94 NPS on how well they did for them in the program. So yeah, I think we've got something going here which is special and works very well. And part of that is because ABN AMRO really opens up for these founders and works for them. So this year we have another 10 companies, and they are from 8 different countries in Europe. As we said, we have 22 founders here, and we have them in wealth tech, we have compliance tech, we have rental tech, we have digital assets, we have digitized carbon credit play, we have AI and virtual worlds, we have companies focused on startups and how to help them get investments, we have portfolio management and ESG, we have trading software, and we have a company that offers credit cards for startups. So very, very diverse set of companies again this year, and all in the pre-seed, seed stage. So pretty early, and some of them are here and they will present. We're looking forward to that. Yeah, if you want to know more, come talk to me. I'm here, talk to any of the companies that are here, and have a great afternoon, and great that you are here in our office. Thank you.
I will just explain shortly who we are and what we do. Holland Fintech, you can see us as a marketplace that brings everybody together in the fintech scene, from small startups to the large financial institutions, but also, of course, other stakeholders like the consultancy companies, the lawyer companies that are assisting with funding as well, and also the regulators and the political arena. So we try to make the gap between the larger parties and the smaller parties as small as possible, and help companies grow in their respective strength. Then the monthly wrap-up for September. I think what I would like to say first, you also mentioned, Allard, you are active in Tel Aviv. We signed an MOU last week with the FinTech Center in Israel. We all know what happened there, tragically, and I think we would like to support them in this terrible time. I personally also have quite some family there that is in unsure times, so I know what people are going through there. And just support from our side to them. Then a bit more positive news, although some people might question. The ECB raised their interest rate again in September to 4.5%, while the Fed in the US is at 5.25%, so still a little bit higher. But of course that's important also for the funding industry. Then open banking in the UK surpasses 11.5 million payments, so it's still increasing, although it's still of course a quite small number, but they are a little bit ahead of us in mainland Europe, so that's remarkable. Apple Wallet in the UK can now show the current account balances as well. So we see that the banks are getting a more role on the background of things, and the parties like Apple, Google, etc. try to advance and get their role in the forefront. This will probably lead to people checking their banking apps less regularly, because they can already see their account balance in the Apple Wallet. EPY announces Vero as the name for their digital wallet. It's also remarkable because although we are not going to use it yet, we will probably all use it in the future. We now in the Netherlands of course know Ideal. They will first introduce Ideal 2.0 before we will go to Vero, but it's anyways good to know what's coming for us. Also PayPal, an interesting position there. They introduced a stable coin that's now available on Venmo, and of course we have talked a lot about a stable coin by the ECB, digital currencies, by the public sector, so publical stable coin, and this will be another private stable coin, so there's still room also for private initiatives in this area. Coinbase expands their easy bank transfers to the Netherlands. And Hyundai Kona 2024 edition will be able to also convert payments. So with Hyundai, they made Hyundai Pay, and in your car, we've seen it already, of course, in the Teslas. More and more software are recorded there, and Hyundai made use of it to introduce their own payment system. So interesting to see how many techies of us will drive Hyundai Kona next year. And then the UK fintech Wise has been accused of inappropriate controls of Russia financial sanctions. This is also, I think, worth mentioning, because it definitely tells us that regulators are more and more keeping an eye on fintechs, and to also, of course, check if they comply with these kind of sanctions. A company like Wise, I think, started, of course, trying to aim for everybody around the world for cheap and reliable payments and as fast as possible. And this kind of also interacts with their ethical boundaries. But good to mention. Then ABN AMRO has become the first Dutch bank to register a digital green bond on a public blockchain. Always good to see, of course, that the innovation is still going strong there, and nice that they have now their first green bond on the blockchain as a Dutch bank. So well done. And the UK-based Alpha Group acquired 85% of 𝐂𝐫𝐲𝐻, which is originally a startup from ING. What we see is that a lot of fintechs try to gather strength and therefore do some acquisitions in order to become more powerful. In this case, the Alpha Group also acquired 85% of 𝐂𝐫𝐲𝐻. So remains to be seen what this will lead to. Here a short summary of the funding globally. 𝐇𝐞𝐫𝐞𝐬, they got 811 million of funding in September. Ampla 252 million and Fazio 250 million. I think the first one, 𝐇𝐞𝐫𝐞𝐬, is quite a high number relatively for the last few months. We have seen a few months with global funding of not bigger than 500 million, so 811 million is again quite a good number to see, and of course great that the funding is going strong. What about the Netherlands? A little bit smaller. Roosman Labs, they acquired 4 million for the data collaboration and privacy platform. So that was the only funding for the Dutch market in September. And what we also do, we do a weekly research newsletter where we gather the most relevant research that has been done in the fintech sector. And I picked out this one for the month of September. The digital payments are still increasing. We see here in 2017 we had 101.4 billion digital payments. And in 2023, 162.1 billion. And the report also mentions that they expect this to increase for the next 4 years until 2027, at least with 10.7% per year. So the growth is still not satisfied in that way. Of course, the Netherlands, I think, is one of the most advanced countries in this area with digital payments, and on a global scale, a lot of companies still have a lot of room to grow. So that's the most relevant research for September. And now I give the room to our first speaker, Willem, from the Roos Advocaten. Excited.
I have our blockchain department at our law firm. Sorry for putting a lawyer in front of you. Bear with me now. We're a relatively small firm here in Amsterdam and Brussels, focusing on basically high growth innovators. That is, well, most of the time it's tech companies, but that's quite broad, so from M&A, biotech to fintech and crypto. And basically my day comprises of advising crypto companies, varying from centralized exchanges to DeFi platforms, NFT gaming, ticketing, etc. And also some more traditional payments and banking services. So you can imagine that since about last year I've been quite busy working on the new European Crypto Act, MiCA, depending on where you're from. And I was asked to share some thoughts on that, but then it's a bit difficult because it's quite technical, it's quite a comprehensive regulatory framework we have now, and I have no idea what your knowledge or experience in that field is. So maybe first some hands on people who've never heard of MiCA before. Excellent, that's quite a few. And then some people who work with MiCA on a daily basis. People working in crypto. That's a few. Okay. So in short, in the US we see SEC basically at war with crypto companies in court. In China, crypto is basically banned, and in Europe the approach is a bit different in the sense that there is now a quite comprehensive regulatory framework for basically everything crypto that was not already in scope of existing financial services legislation. It entered into force last summer, but applies as of partly next summer, and otherwise the rest as of the 1st of January 2025. That seems quite far away. At the same time, time is running up for preparations for most companies. So I am now almost on a daily basis advising companies on the one side, strategical decisions. Are our activities in scope, and does that scope and the regulatory requirements fit what we're doing, or should we pivot a bit? And also already preparing license applications, etc. At the same time, I'm running a book on, like a handbook, a practical handbook on the legal aspects of MiCA and how to basically comply and obtain authorizations and market access in the Netherlands and also Europe-wide. So that's me. This is a presentation I made, I think, about a year ago to just give a presentation to some clients on what are some key concepts, and I thought I'd just browse through and give you some highlights and attention points, and then afterwards you have, I think, 2 minutes for questions. I only have 8 minutes, I think I already spent 2, so I'll make it brief and high level. The idea is, please read it on the slides, I'm not going to read anything off, but the idea is there was, a few years ago, Libra was introduced, and Facebook would introduce this private stablecoin, and that made basically all central bankers scared because they thought they were losing control. This is what we also now see with the central bank digital currencies in Brussels. But basically fear was the background of this act, which then turned into quite a comprehensive act for basically everything related to crypto. And in essence, you can look at MiCA as a light version of many existing financial acts that we already have today in the financial markets. It's a combination of rules as we see in MiFID for investment, for example, what we see in the market abuse regulation for insider trading, for example, and many other prospectus regulation for issuing securities. And then all of these acts, there's like a light version of that put into this act for the crypto sector. That as a way of background of where to place it, and then I thought it would be nice to share basically my idea is the biggest challenge and my advice for the coming period, and then you hopefully understand why I believe that's the case at the end of this presentation. In my view, the biggest challenge for companies is not obtaining the right authorization at the right time. It's not the costs associated with being regulated. No, the biggest challenge will be, in my view, the fact that the crypto sector is now largely unregulated. It's basically a cowboy world, so to say, and as of next year it will be part of the financial sector, which is one of the most heavily regulated sectors there is. And that means a mind shift. So, in my view, the biggest mistake a company can make, if active in the crypto sector, is make it a legal thing. Make MiCA a legal thing, the legal guy or legal team, you sort it out and we keep doing what we're doing. In the end it should be done, MiCA should be lived almost by the entire company, as everything in your company will change in terms of mindset. I would say that's the biggest challenge for the sector, and my advice would be to start today, or actually yesterday, as 2025, on one hand, is quite far away, but time flies, and especially when you're dealing with regulators and you want to be on time, to be the first being able to actually exploit the new market access you have, and then having now Europe instead of a single jurisdiction as your market. This is very briefly the current regulatory landscape. There are some tokens out there that are currently regulated because they are tokenized securities or otherwise. The majority of tokens are not regulated. You see them, you see payment tokens, utility tokens, all kinds of variations. So that's on the token side. Then on the service provider level, basically only exchanges and custodial wallet providers are regulated and all others are not. That will change as of next year. Almost every token will be in scope of MiCA. There are a few exceptions. We can discuss that maybe afterwards if you're interested. And there's different regimes. So if you are issuing stable coins, the regime is heavier. It's more seen as more of a threat, not only for consumers but also for financial stability, and a license is required. If you are issuing any other type of token, basically you will need to publish a white paper comparable to like a prospectus light. And then there's a few players that we now see under MiCA that are specified. You have issuers, persons seeking admission to trading, and offerers. Very often that will be the same person, but it can be different roles that are regulated slightly different. And then there's crypto asset service providers. These are the different services regulated under MiCA. If you offer one of these services, you require a license, but you may also offer various services at the same time. And I guess most of them will sound familiar to you if you're active in the space. There's one that's a bit tricky, and it's probably going to be the service provided most, or at least the box ticked at license applications most. It's the transfer services. As basically you cannot, with most of these services, you will also be providing transfer services. I don't think we have the time now to discuss all of them. But know that if you will be active as a service provider or offerer, there will be various rules applicable to you. They are basically fit in the boxes of governance requirements, prudential rules, rules on the safeguarding of your customer funds and assets, conduct rules, and information and reporting requirements. This is a bit too detailed. And then looking at those boxes, if you zoom in, there's quite a lot of stuff you need to have in place. That varies from, on one side, like policy documentation, but it goes all the way to your technical procedures and also the diplomas, for example, your staff needs when they are advising on cryptos, for example. I already said there's also market abuse rules, so the idea is to get rid of all these pump and dump schemes that were popular for some time. And then I guess to end up, and there's some challenges and opportunities here. To start off with the challenges, I already mentioned the mind shift, which I think lays at the bottom of this all. Because really now, as you saw, there's all these requirements that really require a different mindset of you and your staff. There is going to be an increased regulatory burden. There's no doubt about that. And I think one of the challenges is how can new players, new entrants, obtain the sufficient funding to actually start a new business in this field. So if you're already active and making profit, that's a big plus at the moment. There's a lot of open norms in MiCA. So where the rules come from MiFID or other existing financial service legislation that are quite detailed, that is not the case for MiCA. There's a lot of rules that are quite open, and that leaves room for interpretation, which is sometimes helpful and sometimes less. In any case, it's good to be aware of. I think we'd say that for the moment these are the most important ones, because it's more fun to focus on opportunities. I would say the biggest opportunity here is that Europe is now the first bloc to introduce this comprehensive regulatory framework. And so on the one hand, that gives cost, like I said, but it also gives legal certainty, and people actually now know what, to a large extent, know what they can and cannot do, which is, as we see, well, the last couple of weeks, again, not the case in, for example, the US. There is also now, for the first time, a real single European market for crypto services and other activities. So instead of the current regime where there's registrations in each jurisdiction and there's a lot of confusion and different treatment, now in principle the idea is that the entire European Union has the same regulatory framework, the same market that you can service with just one license in your home member state. Crypto will also become more mainstream, and that's nice for many reasons, but also for the fact that until today, many crypto companies struggle with very basic things, like obtaining a bank account. And all those practical things, because other companies that are already regulated are just scared to touch it. And the idea is also of the legislator that should end quite soon now, once licenses have been obtained. And I would say, once you have a license, once you are regulated here in Europe, it's quite a safety stamp you get. It really means that you went through quite a stringent process, the same or comparable to what payment service providers and banks also have to go through. And that can, in a world with FTX and all these other debacle of the last couple of years, quite something. It's going to need quite something if you want to obtain the trust of your users. Oh yeah, maybe one thing, M&A opportunities, it's a bit a tricky one. It's an opportunity, but a select few. With the regulatory burden that will be the result of MiCA, there's a lot of companies I talk to now that say, that's just a bit too much for us. We can't afford it, we can't work with these regulations. So there's a lot of crypto companies up for sale right now. We see quite a few of the exchanges have lately bought some of their competitors, and I'm expecting a lot more M&A activity in the field in the coming 12 months. So how does it look like in terms of timing? As I said, this summer it entered into force. As of summer next year, the rules for stablecoins start to apply, and then end of year the remaining rules, and then there's still a transitional period for those crypto companies already licensed or registered. That is a bit tricky though, because every member state can decide to shorten that period. So the maximum is 18 months. The Netherlands currently, the idea is to reduce that to 6 months. And every member state has the freedom to do something with that. The interesting thing I think is that I feel it a bit short-sighted because there's a lot of companies out there that are now trying to get that period as long as possible in the jurisdictions where they are active. Some other companies, and I think they are on the right side here, are not interested at all in the transitional period. They are interested in getting that license as soon as possible, because that provides them access to the entire European market. And I would personally recommend companies to go for that option. And that stresses again the importance of starting your preparations today, as you want to be the first on that small pile of early applicants at the regulator. Because you can imagine, pure from a practical perspective, there's not 1,000 regulators available here or elsewhere that are going to deal with MiCA applications as the only thing they do for the rest of their life, right? Everybody needs time to process all the documents that will be submitted to them. So there's some technical considerations there as well. I think that's about 8 minutes. No clue.
Perfect, yeah, in time. Are there any questions for Willem already? Chhay?
Do the MiCA regulations say anything about DeFi? And if so, what do they say?
DeFi is a bit of the elephant in the room when we're talking about MiCA. The initial proposal from the European Commission did not mention the word decentralized or decentral or anything similar. Not in the legal text, but also not in the accompanying documentation. In the final text, there is in recitals, I think the decentralized is mentioned twice. And what it says is that truly decentralized cryptos or service providers are not in scope of MiCA. The problem is they don't explain what should be considered truly decentralized. And conceptually it's a bit tricky, because an idea when somebody starts for the first time, it's never decentralized, right? So you need a certain number of people and other actors to at some point become decentralized. So that's a bit of a tricky thing. And a lot of the regulators in Europe and also elsewhere are also skeptical about the whole conception, the whole idea of decentralization. I think it was this Tuesday that what's his name, Steven Major, director of the Dutch Central Bank, is in London at the London Central Bank, and there he held a speech on crypto mainly. And one of the things he said was, and I'm talking about centralized exchanges or centralized service providers, and with that I mean all service providers, as decentralization doesn't exist, or something like those words, when looking at economic reality. So this morning I was at Bitcoin Amsterdam, and well, all kinds of people and questions and stuff going on there. But I think the one crypto that most people agree on actually is decentralized is Bitcoin, and of most of the others, it's going to be a interesting debate, let's say. Please clear the question.
Yeah, you touched upon this a bit, but to give a bit of context, there was some legal fighting between Dutch crypto companies and regulators, right? The DNB recently.
Yeah.
Do you think it's realistic for companies to try to sidestep this now to get a license in Spain and then passport it back to the Netherlands or something like that, because we have like one European market now? Or what's your opinion on that?
Yeah. So in essence, you're free to apply for your license in whatever member state you want. There's a few things to take into account. One is that no regulator will accept you if there's no substance, right? If a company from Spain would apply here, for example, but there would be no office, no staff, no directors, nothing, the AFM will probably say, well, that's very interesting, your application looks very nice, please go to your home state regulator. But of course, if you are willing to move, or if you have substance in multiple jurisdictions, then you can decide on the regulator of your choice for submitting your application. The idea of MiCA is that it is harmonized throughout the EU. So the information to be provided should be the same everywhere, and the treatment should be the same everywhere. That being said, in practice, of course, there is always differences in interpretation. There is not only on a member state level, but also on a personal level. I mean, in the end, regulators are humans as well, and everybody has their own interests and specifics. I think it's way too early now to fantasize or have an idea about whether there would be jurisdictions that would be easier than others. But in practice, of course, there will be differences, but they should not be too big.
Okay, clear.
Any other questions?
Okay, then thank you. I hope it wasn't too legal.
Thank you very much for inviting me to be a speaker here. My name is Chhay. I'm the founder and CEO of Holland Finance. Before I start, I would like to ask you guys a question. How many of you have ever moved fiat currencies to a digital currency and then engaged with DeFi, decentralized finance? If you've done, please raise your hand. Oh, there's actually quite a lot, maybe around 30% of the space. Then I think you all also understand how difficult it is for newcomers to go through this process. This process is what we call the on-ramping process, and this is what I call the on-ramping problem. And I believe that if we really want to have great adoption of digital currencies, we need to solve this on-ramping problem. And there's already a solution. The solution for that is the Web3 IBAN. A Web3 IBAN is like a very similar bank account number that you now have when you have an ABN AMRO account or Rabobank account, ING account. The only difference is that this Web3 IBAN connects the fiat rails with the blockchain rails. So what you, for example, can do, you can have your own ABN AMRO bank account and you can send money from there to your Web3 IBAN. And what happens is that a crypto euro is minted on the blockchain related to the account of the Web3 IBAN. And once it lives on the blockchain, you can then send it to other people against very low cost, even against a tenth of a cent. or you can use it to exchange for other digital currencies, you can use it to earn a yield. You can build all types of very interesting services around this Web3 island. This is what Holland Finance has been doing. Holland Finance is using a Web3 IBAN and building all types of financial services around it. And I believe that 11 trillion euros that is right now inside the banking system can then easily move towards the digital world, towards the crypto world. It can be exchanged for digital currencies, it can be used for a yield, it can be used for payments, and then effortlessly flow back to the banking system again. Because if you have the crypto euro on your Web3 IBAN, you can also send it to anyone with the normal ABN AMRO bank account. And what happens then is that the crypto euro is burnt and the beneficiary receives his fiat euro again. So let's take a step back and look at how the on-ramping process looks like. So imagine there is a person, let's take an example of a newcomer, and he would like to engage with DeFi. And what are the typical steps that he takes? So first he goes to a centralized exchange, he registers there. Once he is registered and accepted, then he sends euros from his bank account to the centralized exchange. From there, he can then convert that fiat euro to a digital currency, let's say a USDT. But for him to engage with a DeFi protocol, he also needs a Web3 wallet. But most of the Web3 wallets that people use is the MetaMask wallet. So he's going to download MetaMask, he will sign up, he gets a very weird, very long mnemonic phrase, not user-friendly at all. And then he's going to send the USDT from the centralized exchange to that Web3 wallet, and then finally he can connect his wallet to a platform. This is a DeFi platform. Very, very cumbersome. Well, how our Web3 IBAN works is as follows. If you register at Holland Finance, you get automatically a Web3 IBAN, and as you can see, it looks very similar to a normal bank account number. It's actually something you can remember, unlike your private key, probably. You can top it up, for example, with your ABN AMRO bank account or your Rabo bank account. There's automatically a crypto euro minted on your account, and you can immediately engage with DeFi. This process, I think, is much, much easier. So what Heartland has done is we have built a technology stack based on the IBAN technology, which is what I mentioned before, a bridge between the fiat rails and the blockchain rails. On top of that, we built a wallet layer, an exchange layer, and payments layer. And doing so, we can offer all kinds of very interesting financial services like payments, exchange service. So you can exchange your crypto euro for example, USDT, for Bitcoin, for other interesting cryptocurrencies. And you can also engage in yield products. And the fourth product that we are building right now is a factoring product that we would like to offer to the freelancers that we have in our database. How does it look like? Well, this is how our platform looks like. It's very easy to use. On the right-hand side, you see the yield products. You can go click on the deposit, then you can deposit, for example, from your bank account. You can do an exchange to other cryptocurrencies, and you can transfer your digital assets. We are fully regulated. We are regulated in the Netherlands, not central bank. And all this is possible because you, as a user, have your own personal Web3 IBAN. There's one. So I would like to wrap up this talk to give you the key takeaways. It's always how I end my talk. So the key takeaway is on-ramping problem has been solved, and I think we have solved it through a Web3 IBAN. Secondly, once you have your crypto euro, you can use it for so many interesting things against extremely low cost. It costs less than 1/10 of a cent to do the transfers. And it's also immediately cross-border, right? So I think that using a product like this can be really, really revolutionary. It's really, really something mind-blowing in my opinion. And I hope that products like this can lead to mass adoption of something I'm really passionate about, which is digital currencies and DeFi. Thank you.
Thank you, and thank you for inviting me to the event. Yeah, we are one of the companies that started the acceleration program. When I met Allard, we wanted to bring tokenized equity adoption to the market through global audiences and crowdfunding. And yeah, we actually started signing a few clients to go to market, but something very interesting happened. Our clients started talking about us in a different manner than what we thought. They actually didn't want to tokenize their equity or their shares. They were mostly e-commerce brands. And they started talking about us as a tokenized loyalty program. And that's what we became. We're Hypeal.com, and we're turning customer loyalty into tradable assets. This is the problem that we found. 80% of customers in the e-commerce space churn. So if you buy a shoe from an Adidas e-commerce store, 80% of chance you're not going to buy anything else through the rest of your life. And that's a big problem. Companies and retail brands offline and e-commerce online have been trying to solve this for decades. How? Through loyalty points. The problem with these loyalty points is that we don't really know how many we have. We lose them across channels, and they don't have any intrinsic value. So consumers don't care too much about them. They feel it's just a way for them to spend more money with the brand. So what brands do is to offer discounts. Discounts reduce the brand equity. So what's next? That's us. We are creating tradable loyalty tokens that allow consumers to buy an asset from brands, use the benefits, and resell this asset when they don't need the benefits anymore. This is actually a pretty big market because loyalty is all about repeat purchases. Repeat purchases are actually cheaper than acquiring new customers. And globally, this is a $200 billion market. If you look at US and Europe, 10% of the market for e-commerce, it's 150 billion. Capturing 1% of that, it's 1.5 billion for us. So, big opportunity. Effectively, what we're doing is creating exclusive digital assets that provide intrinsic value and tradability to loyalty token. By doing so, we enhance brand loyalty and reduce churn, something that brands really care about. Nowadays, that budgets, digital marketing budgets, have shifted from acquisition to retention. So this is how it works. We list the hypes for sale. That's how we call them. We don't call them NFTs or tokens and so on. We are creating a new word and the name of the company. For example, the 𝐿 hypes. So people can buy the hypes, access the benefits by connecting their Google account. By connecting a Google account, we issue and mint a token in Polygon. All of this is done through fiat payment. So compared to, let's say, marketplace like OpenSea, there's no crypto payment involved, and everything happens in the backend. Once the user owns the hype, can purchase and use the benefits on the store of the favorite brand through his hype and accessing his benefit automatically through an integration. So from the user perspective, the friction is reduced to the limit, and once the user wants to sell his hypes again, comes to our marketplace and can resell it. There are limited amounts, so we allow the sale and resale of these hypes in our marketplace. Some use cases, membership, that's the biggest one. That's where we see most of the value for brands. So connecting a hype and say you skip the line and you become a top membership tier, as if you add an X amount of points and you have this amount of benefits. Another big use case is actually connected to product drop. So you can only access this product launch if you have the token, if you bought the token ahead of time. And this is something that brands have already experienced with with NFTs. So the team, we already built and exited an e-commerce business, so we know how it feels to be in the game of acquiring and retaining customers. And I also worked already in Adidas and Reebok in the marketing teams and membership teams as well. my co-founder. Andrea has launched more than 25 products in the market through crowdfunding. And Akshay Gupta, our CTO, has already built a tokenization issuance platform that we are also using as our backend of Hypeal. Yeah, so right now, next steps. During acceleration, we have 3 customers. A smaller one that has 8 million in annual revenue. We launched their HYPEs, their tokenized loyalty program, compare the metrics, see how the average order values, the conversion rates, the frequency of purchases of the token holders are compared to the rest of the user base, and then we go after bigger clients and larger companies. Competition, think about OpenSea, but OpenSea is more a marketplace for NFTs, digital art, crypto payments, and so on. We do only fiat payments and blockchain in the backend. And Smile.io also raised 47 million, born in 2015, focused more on e-commerce, loyalty, and tokenization. Something a little bit in the middle. Risks, obviously the changes in technology. We're using Polygon in order to do so because of the low gas fees and the high adoption. Regulatory risk, compliance with MiCA. We're working with CMS legal firm here in Amsterdam in order to make sure that we're compliant with all the steps in the way. And the third part is the adoption, so really getting as many companies as possible in our platform. As I mentioned, right now we're launching 3, so we need to be really good at automating the process, onboarding, and scaling to build the marketplace. So we raised in September $200,000 thanks to Techstars, ABN AMRO, and a few angel investors. And the goal is to launch the first 10 customers with $100,000 in revenue for 2024. Thank you, and let me know if you have any questions now or later. Thank you.
Any questions already?
Yeah.
What's the token standard you use?
The token standard.
Is it like an NFT token standard, or is it ERC20?
Yeah, ERC20, and then as a layer.
Anybody else? Any questions from the audience?
Yeah. I didn't see it.
Since is your app working as a wallet as well, if you want to make transactions then on the blockchain, or you need an external wallet?
We use an external wallet issuer. Yeah, that connects to Fireblock.
Okay,
And
but
then
me as a user, do I need to have 2 applications there, a wallet and your application?
You
or
don't need to
I
do
don't.
anything. You just connect your Google account, and then in our section of the website, there's My Hypes. And then automatically Google retrieves the hypes that you bought, basically. Yeah, I can show you.
Is it possible to trade one hype for another hype with different brands, or is it just in-app you have to sell it and then somebody else buys it?
Great question. We are thinking of developing that feature because you're not the only one asking. But since we are the MVP, right now we are keeping it simple, so buy, resell, but exchanging seems to be quite interesting, so we'll definitely test that feature as well.
Okay.
Yeah, to drill off that question, so if I sell it on the marketplace, do I sell it back to the company and get cash for it, or do I sell it to other people that want the hype assets?
The second one, right?
No one wants it.
Then it's like as you are listing in a marketplace, right? So you list it until someone wants to buy it. So, yeah.
Are the hypes unlimited, or can someone buy all of them and overprice them?
That connects to that question, right? So let's say you issue 1,000 hypes from brand, let's say Reebok, and then those are sold. The only way for you to get it, if you don't have it, is to buy it from someone that already has it, and that's how we built the scarcity and also the transactions in the marketplace.
Techstars and ABN AMRO covered this year. KUMO is active at the intersection of decentralized finance and the voluntary carbon market. And we provide working capital solutions for these carbon markets. To give you some background, the voluntary carbon market is a mechanism that drives investments into nature. And you can then buy these claims as companies, use them in your own CSR reports to compensate the non-avoidable carbon footprint. Carbon credits, as of now don't have any financial utility. You cannot do anything with them. You can retire them, you can trade them, but they just pile up money on your balance sheet. And that's what we want to change. We want to make them a tradable, active asset that actually comes with financial benefits. So in the beginning of our carbon credit lifecycle, there are these project developers, the ones that do these forestry projects, cookstove projects. And even if they have a balance sheet full of carbon credits, they struggle to get access to money. And they need money to remove carbon from the atmosphere at scale. Beginning of the life cycle, they are the companies that use these credits to meet with the regulation or the voluntary targets that they set in order to achieve their net zero strategy. These buy these credits, pile them out on their balance sheets, going forward financing deals, which again ties up more money in the balance sheet. And we want to provide them with access to funding to turn climate action more from a cost center to a profit center, or at least cut the cost. Many of you are on crypto, so when we started, we pitched ourselves as the maker DAO for carbon credits. For the ones that are not in crypto, similar to what KUMO initially approached was mortgage loans. So you have something that you deposit as collateral, your house, but in our case it's carbon credits, and then you get access to a discounted loan that you can then use. But I mainly want to share some lessons learned today, because we had a pleasure to listen to Filippo Chisari or Chaziri. I'm not exactly sure his name, but he asked us, like in a crew, how do you think product market fit looks like for DeFi in general? And we said some amazing things, but the reality is 99% of our people don't use DeFi, so there's no product market fit. And then we started thinking, okay, what could we do? And we just draw the initial process of how KUMO worked. So we have these registries here. These are off-chain. So gold standard Vera, that's just a legacy database with carbon credits in there. And then you need to tokenize them via bridges. So Toucan, Flow Carbon, maybe some of you heard the 𝐂𝐫𝐞𝐫 and Toucan story 2 years ago. And then we end up with carbon tokens. And owners of the carbon tokens can now use them and deposit them in KUMO. It's our protocol that we built. And the idea is that you own carbon credits on your balance sheet in these registries, and you want to get access to cash in your bank account. With your bank account. Because then you can pay for operations, invest, and do something meaningful. So how can we go from a DeFi product to a bank account? In our case, we started with a stablecoin that was called KUSD, like KUMO US dollar. But then you need to go to an exchange. Because we're a startup, we don't have enough money to list our stablecoin in a centralized exchange, meaning you go to a decentralized exchange. And then you typically go from one stablecoin or cryptocurrency to a stablecoin like USDC. And USDC you can then buy a centralized exchange or an offline service, finally transfer to your bank account. And this is the user experience that we started with. I think it's a shit user experience. And it's not only a bad user experience, bridging costs money, but that's what we cannot change, and we need tokenized carbon credits. Because if we use tokenization of real-world assets, we make composable assets out of them, we can create commodities, we can increase liquidity, we have transparent pricing, and it's easier for us to hold them in custody. But also it costs money to change our stablecoin into USDC. Depending on the exchange, it's 0.3% with Uniswap, can be more expensive or cheaper. And it costs again money when you want to go from USDC to your bank account. So it's lots of steps to do and it costs money. So the first iteration was, what if we could remove our stablecoin and maybe build a lending product? So in a lending product, we can skip this and you go from KUMO to USDC. Lending product means that we have borrowers that want to go from a registry to money in their bank account, and we have lenders, liquidity providers that have cash, that want to earn some yield and drive climate action. But again, this step prevents the majority of our customers, the real world, banks, credit unions, funds, hedge funds, project developers, commodity traders, to get access to a product because they don't have a wallet. They don't have the compliance process, no risk management to deal or touch crypto at all. So they really want to go this way, fiat money. So this is all gone now. And by this, they save money and we increase the user experience. So that's where we are now. We have DeFi here, but this is the real world. And now we have the challenge, we need to build a hybrid product. So what does it mean? I don't know, because there are not many solutions that work like this. So we have assets on-chain somewhere that we hold in custody, that we can price, that we need to liquidate, but now we need to implement all these fiat payment rails and map these two worlds. That's where we stand. And this is a meetup for everyone that is in crypto, has thought about similar problems. Please come to us, enlighten us, or challenge us and say, well, better go this way because it's so much better, the technology is so innovative, but actually users don't care about the how. They want to get money in their bank account as easy and cheap as possible. That's it from my side. Looking forward to questions.
Thanks Network. Today will be not so much as a pitch, maybe more of a background of our company and our search, our quest for product market fit and how we're having early traction and getting closer and closer every day. This is our team back in 21. So we've been around and we've been funded by the EU back in the time. We had a very cool project for the United Nations where we deployed a lot of wallets, and our basic service back then was tokenization. Which felt great at the time, but we discovered that what the problem with tokenization is it's very difficult to find a one-size-fits-all token utility for companies across the board. And we attempted to sell tokenization as a service. But what happens then is that you have to help companies figure out this token utility. And you get in all kinds of legal, regulatory trouble. It's a long, long road, and basically it's a nightmare to build a SaaS in this market. So we moved on. Last year we were in the Techstars program, highly recommended. So if you're running a startup, definitely consider applying here, especially here with Allard here in Amsterdam and his team. We pivoted, as they say, towards loyalty, which was already much, much closer to where we needed to be. Yeah, that was good. Nevertheless, we kind of decided to focus even more. So now we're more into what I would call loyalty in the gaming market, but you should not drop the word loyalty in the gaming market because they don't understand and they don't care about it. But I will explain what they do care about right now. So basically, we are now a reward engine which helps game studios grow the amount of players they have. And I'll explain how we do this. So the title of my presentation was also to how we drive growth and revenue through our plug-and-play solution, so I will explain. But first, to get you a bit excited about the market of gaming. So there are 3.3 billion gamers. This is data by Newzoo, which is an Amsterdam research company, quite big and successful, by the way. If you're into the gaming industry, definitely check them out. 3.3 billion gamers. 8 out of 10 people online games in some shape or form. So, you know, it's almost like saying everybody is your potential customer, which I will not do, but, you know, just think about it, how huge this is. 200 billion euros goes around in this market. This is bigger than movies and music combined, right? But if you're really paying close attention, there is already a bit of a problem appearing here, that if you see the last slide in this, that some of these categories are actually shrinking in revenue and not growing as fast as the player base. And this begins to touch the heart of the problem we're solving for our customers. So our customers are actually struggling, and these are indie game developers, so these are not talking about 100 billion euro studios, but these are indie game developers, which are usually between 10 and 40 people companies. they are struggling getting their players on board and keeping them. Why? Because gaming was about user tracking in the past, right? And ad revenue. And all of this has been regulated away due to fair privacy reasons. But these games and game studios are struggling to keep up their business models. And 𝐂𝐤𝐤 also acknowledges this, that the new, the next 5 years will be all about new user acquisition models for gaming studios and new ways to get players in, right? So it will not be about user tracking anymore. And this is exactly where we help. And today I will grab from these three people. We'll use the Jaap on the far right of this slide, who runs Carbify, which is a carbon debit startup, which is very interesting. So they are not into credits, but they actually plant, well, not themselves, but they build digital assets which represent trees, individual trees. So these are NFTs, and these distribute CO2. So actual CO2 being distributed, not moved from place to place. I will show you how we help them gain users and grow. We'll skip this one. So this is on the left-hand side is what runs on is our software that runs on their website. So what happens is that you have this gift box in the lower corner, and you open it up, and people that visit immediately can start performing quests, which are immersive journeys, which are either on social channels, like follow our Discord, retweet our tweet, or even better, and that's actually what makes us unique, there are things that happen in their software or in their game, right? So you can level up, buy a certain amount of credits, invite friends, and you perform these quests and earn points. And in these points, this is also all in our interface, you can buy their digital assets. And they have various digital assets. They have their governance token, they have the actual CO2 tokens, they also have their land plots. So these are the items you need in their game to actually be able to distribute this CO2, which you can then offer to companies and sell. And they have in-game characters. And this is a very engaging experience, much more engaging than most of the current CO2, which are quite dusty projects, most of them. And what's also crucial, I think there was a question from the audience before, we provide the wallet infrastructure all integrated into this. So this is a non-custodial wallet, it's very fast and free, user-friendly, we pay all the gas fees. And it says also social signing, very important for most users. You don't want to easily lose your keys and then lose everything. You can just log in with Google, Twitter, and all that kind of thing. Also, for power users, we have MetaMask, but from our research, almost 90% use social signing. And what gets me really excited is actually the results. So this is Tariq from the marketing team, and this is a graph going up, which is always good. But these are the interactions driven by our wallet and their tool. And this is a scale in days, and this is 10,000s of them. So it's really driving a lot of traffic for them, really leading to token buyers, CO2 being bought, and really drives revenue in the end, right? So and these are real use cases with a hybrid solution between tokenized infrastructure and quite solid and conventional business models. So how do we make money? We have basically two plans. We have a free onboarding plan for a time limit amount of time. But we do outbound sales for the premium one, which involves me spamming you and a short call, and then you need to buy it online as well. And we have the self-service one, which is around 90 euros, but then you really have to come in, buy it yourself, and get it up and running. We are adding about one customer every 2 weeks now in the premium segment, so this is going pretty well. I would like to bring it back to like one every week. That's my current goal. So if I can go from 2 to 1 in 1 week, I think that should be doable, and then we have a very good business going.
Quick stupid question.
Yeah.
You're selling to businesses. You're B2B.
Yes.
So it's a business that is encountering this and deciding what to do.
Absolutely.
Of course. Yeah. Okay.
Yeah. B2B2C. Yeah. So yeah, next goal is to get that to 1 week. This is my team. Well, I have a business background. This is my third business. I exited the SaaS, community SaaS, when Big Capital came in 2019, around that time, and I have Peter Pullman as my co-founder, technical co-founder, and also a great technical team builder. There's a lot of stuff going on this slide. I think the important thing is that we also have an informal board set up thanks to Techstars, partially, mostly, also some external advisors, which helps really in the connections and the business move the business forward. And we have a quite active community, which is not only token holders, but people who come on and off, also as contractors, sometimes also as paid employees. So it's not just anonymous people. It's come along as, for example, ex-3D Hub's CTO, 300 million exit. So these are really top-notch people who like come on board for a while, bring us to the next phase, and sometimes even then leave, which is fine. We pay them partially in tokens, which is very good for our burn rate. So, talking about the investment and the burn rate. So, what we sell right now to investors is our token, and I think like one of the key benefits, in my opinion, from investors of investing in tokens is that there is liquidity available to get in and out of. So in our case, it's around 1 million of on-chain liquidity. So instead of like buying equity, which you need to stick with for 7 to 10 years, which might be a very long time as an angel, you can, hop on board. The best time to invest in tokens is right now, right? Because it's, the blood is in the streets. Sure, the prices might go lower, they might, but there will definitely be better times. It cannot get much worse than this. So. And to make it even better, so what we concretely offer is a 7.5% discount on the market price, so to make it even more sweet. Yeah, that's about it. So if you want to connect, please scan the QR code, and yeah, let's talk a bit more. Thank you.
The winner of today, also pick up your prize. Sorry. Thank you so much. Marco, you're welcome. Yes. Thanks a lot for the presentation. And then just the last remarks before we get off to the drinks. The next events from Holland Fintech, 31st of October, we have Unlocking the Power of AI and Data Trust. On Friday, November the 3rd. Fintech Insights. This is an event online where we give an introduction in the fintech world and get to know our association. And on Thursday, November the 9th is the next meetup, and everybody knows the topic right now, of course, SME Finance. And on Thursday, December the 7th, we have our last meetup of this year with the topic of regulatory and legal technology. So thanks again for today, and also for the host, Techstars, for providing the room and the drinks that we are going to enjoy right now. So please invite you to the bar and network and drink something with us.